What's up, everyone? Welcome back to the channel. We've got a new episode of Ask Allah today, where I take a question from a subscriber and I give a short video response to it. Now, today's question actually comes from our community Discord, which you can get access to through Patreon, or you can sign up on the YouTube join button down below. But this one comes from Mark, who asks, could you please share your thoughts on the recent chip bans in China? I've had stocks for years in NVIDIA, Intel, and I recently bought a little AMD and ARM. Seems that all four are getting dragged down because of the China ban. Are you buying any of them right now? Why or why not? Thanks, Ale. So you're very welcome, my friend, and thank you for supporting the channel and for giving me an awesome question there. Now, I think that's a great question. I actually think that there's several headwinds that are affecting these chip stocks. So let's start by just taking a quick look here at what exactly is going on. Well, just taking a quick look here at the stocks that Mark mentioned, NVIDIA fell almost 12% in September and another 4% in October here this month. We had AMD falling close to 8% in August, 3% in September, and 7% in October. Intel fell close to 2% in August, had a slight rebound in September, and then fell again in October by close to 8%. And by the way, Intel, I believe, is going to be reporting earnings later on today, the day that I post this video. So make sure you keep an eye out for those earnings. But also, since I recently IPOing, ARM Holdings fell over 15% in September and close to 8% in October as well. So what exactly is going on here? Well, let's start with the China chip ban, since that's what Mark specifically asked about. Now, if you're not familiar with this whole situation here, it all really started about a year ago when the US put restrictions on the highest performing AI chips for data centers being sold to China. See, the fear was that China may be using these chips militarily while advancing their progress in artificial intelligence, thus posing a security risk to our, international defense. And at that time, the ban affected NVIDIA the most because they were selling their extremely popular and very powerful A100 and H100 data center chips that are particularly great for speeding up any machine learning processes. Now, AMD was also expected to experience an impact, particularly for their high performance MI250 chips that specialize in AI processing. However, the company stated that their other MI100 chips would not be affected, and overall they believed that the new rules would not have much of a material impact on their business at all. NVIDIA, however, did not want to risk losing any sales to China, so they made some changes to their two flagship chips, and essentially decreasing the power to meet the new threshold standards set by US regulators, and they changed their names to A800 and H800 so that they could specifically sell them to China. Well, fast forward to about a week ago, and the US came out and said, nope, you're not going to be able to sell those either. They're still too strong to be giving to China. Now, just a heads up, the consumer chips like the RTX 4090 are still allowed to ship out to China because they're mostly just focused on entertainment rather than AI data centers. But the two stronger chips, those would have to stop shipping out to China within 30 days of the ban. Well, despite that only being a week ago, we actually just now received another update saying that the US has told NVIDIA to stop selling the chips immediately rather than the 30-day grace period, which is pretty interesting how aggressive the US is acting about this. And actually this time it's not just China but also Russia and Iran that made it onto the ban list as well. And of course, both of those have had growing conflicts with the US, especially recently. And all of that is pretty scary, by the way. I feel like the world is just marching closer and closer to war every week. Conflicts and tensions just keep rising. So I really hope that things start to de-escalate soon, because obviously last thing we would ever want is another catastrophic world war. It'd be devastating. Anyway, despite all this craziness, NVIDIA still claims that they don't expect to see any near-term impact on their earnings from the ban. but I'll give my own opinion on that in just a second. Now, AMD and Intel are also expected to be part of the ban. However, AMD gave no immediate comment, while Intel said that they're still reviewing the regulations and assessing the potential impact. So what exactly gives here? Will there be any actual impact? Is this going to affect NVIDIA sales in any way? And why do they seem so confident that it won't? I mean, if you look at their financials, it's estimated that around 20 to 25% of NVIDIA's data center revenues come from China, which is a huge amount, guys. Like, if we do the math here, we know that NVIDIA did over $13.5 billion in total revenue last quarter, with $10.3 billion coming from data center. So if at least 20% of that came from China, that would be over $2 billion, or roughly 15% of all their total sales. That's huge, guys. And a 15% drop in sales, that would be pretty freaking bad. Not to mention that China is also just a growing market for AI that they could use. In fact, just earlier this month, Chinese officials said that the country aims to increase their computing power for AI by 50% over the next couple years. And I can only imagine how much of that money would have gone straight to NVIDIA's pockets. So why then does it seem like NVIDIA isn't panicking at all? Well, the main reason is that they just have so much global demand for AI already that losing some chips to China wouldn't even really affect them that much. In fact, their flagship H100 chip has had a 6-month waiting period for new customers just to get their hands on it because NVIDIA hasn't been able to produce them, fast enough. And if that's the case, then they could simply just take all the shipments that were destined for China and just reroute them to other parts of the world, since they're practically going to be selling as many as they can produce anyway because of the insane demand. Now, I personally still think that this is a much bigger issue than they're letting on, and I'm feeling very cautious about the whole situation. But in fact, this isn't the only thing that has been dragging down chip stocks lately, as the whole macro environment has also been super challenging. In fact, according to Canalys Research, we've now had 5 quarters in a row of declining PC shipments coming off the pandemic because of weakening demand, which, by the way, Texas Instruments just reported third quarter earnings, and I know they're not a direct rival, but they are often considered a bellwether company for how the broader chips market is doing because of how many chips they produce themselves. And they not only gave weaker guidance than expected, but they even had to cut production and lower their inventory levels because of weaker demand, saying that every one of their segments saw revenue declines except for automotive, which, by the way, I wouldn't put too much faith in automotive either right now, considering the recent worker strikes. But anyway, it was a pretty alarming report, which analysts even said that it points to deteriorating demand that could last for at least a couple more quarters. And by the way, like I said before, Intel, I believe, is reporting later today too. So you might want to take a look at that report, see if they had anything to say about demand going into future quarters as well. Could be interesting to look at. Now, I don't personally want to sound overly pessimistic, especially with NVIDIA, because I do actually think that the market will rebound. Whenever it does happen, I think it will rebound over time, especially thanks to artificial intelligence, which is expected to surpass $2 trillion by 2030, with generative AI alone making over $1 trillion. And it's not just data centers, by the way. I mean, there's huge consumer market too, as Canalys Research estimates that by 2027, 2 out of every 3 PCs will be AI enabled. That's huge. I think AI could actually give the PC market the next upgrade super cycle that it needs. And with NVIDIA controlling over 90% of the AI chips market, I think they'd be one of the biggest beneficiaries. And by the way, there's other estimates out there for AI being a much bigger market than this too, like just trillions and trillions and trillions of dollars. So there's huge potential in AI. And not to mention everything else, like, gaming and autonomous vehicles and smart cities and Internet of Things and much more. In total, NVIDIA estimates that their addressable market alone is worth over $1 trillion too, which is like 37 times the sales that they did in all of last fiscal year. And because of their strong margins, analysts expect NVIDIA's EPS to soar by 74% on average over the next 5 years too. That's gigantic growth. So yeah, I can totally understand wanting to buy into these stocks on the dip, especially something like NVIDIA. But I still have to caution you that these stocks are still, pretty darn expensive right now because the market isn't blind. Investors have been seeing this potential and they've been buying up these stocks all year long. NVIDIA, for example, is up close to 200% year to date and more than 700% in just the past 5 years alone. That's unbelievable performance, and it's left their valuation very rich at a trailing PE ratio that is around 300 to 400% more expensive than the sector, and a forward PE that is still close to 100% more expensive too. Now, granted, their more future-looking PEG ratio using those next 5 years of profit growth is much more attractive at just around 1.2, which is 30% cheaper than the sector. But even then, that's assuming that all of these current headwinds don't get worse or derail their growth, which, by the way, this whole time, we haven't even discussed the giant elephant in the room, which is that everyone is predicting a recession to happen soon, which I don't know if it'll happen or not. I really think it could go either way at this point. But when you have really high interest rates lingering on like they have been, a recession is just going to always be on the table. So, it's a concern and it's something that you have to be aware of. Now, to answer Mark's question of whether I'm buying chip stocks right now, my answer is no, I'm not right now. I have a small position in Intel and a much larger position in NVIDIA already. NVIDIA is like my third or fourth largest stock in my portfolio. But right now, I just feel that they are trading a bit too expensive considering all of these headwinds that I don't have much clarity on. So it really feels like a lot of this stuff is just kind of up in the air, and it makes me feel uneasy about adding to stocks that I already own and that are trading a little expensive. Now, longer term, you guys know that I am just as bullish on AI chip stocks as anybody else out there. I actually think everyone should have at least some exposure to them in their portfolio, but that doesn't mean that every single little dip we get here is going to be a screaming buy that we should go ham on with these type of stocks. I actually think that in this environment, it makes more sense to be a little more cautious and patient. So I'm just holding what I have. I'm not going to be buying more right now. But if I didn't already own some chip stocks, I would actually buy a small amount, especially NVIDIA, just because I want to have that exposure to it. And look, if a recession hits, if anything gets worse and the stock gets dragged down lower, I could just add to that small position over time and lower my cost basis and get down there to a much more attractive price. And if we happen to avoid a recession, interest rates come down, some of these stocks skyrocket, well, then at least I would have some exposure to them. So for now, those are my feelings. That's what I'm doing. I'm just kind of holding what I've got. I want to wait and be a little more patient here. I want to get some clarity on the macroeconomy, the market, the environment that they operate in. I want to get some clarity on the China ban. I want to see how that affects them here in the short to medium term, and then I can make more decisions depending on how the stock is trading. So you asked for my opinion. Those are my thoughts. I'd love to hear what you all have to say, though, down below. Let me know how you feel about the whole situation. What do you own? What are you buying? What are you selling? I'd love to hear your thoughts. And I will catch you in the next video, my friends. Hope you're all doing well. Take care out there. Bye-bye.